following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. I missed Friday. Trying to get prepared for the big southern storm, and it's still here. It's like 9 degrees, which is kind of rare for around here. All the ice is frozen that animals usually drink out of. Let's take a look at gold. And somebody says it's in the 30s in Florida right now, or going into the 30s. That's quite amazing. Let's take a look at gold really quick. Here's the daily on gold. And this is, we had a really interesting setup on gold on the weekly, and this is the daily. So I just wanted to kind of let you know, again, Thursday closed above, come back and retest, reached the low of 71. I think that high was, the unfair high is about 69.70, 69.5, got in the neighborhood. Now we're kind of bouncing off. So that's what we talked about. We got to always wait for confirmations. And when you look at the weekly, this was kind of one of the reasons where we started looking at this, trying to nibble from the long side, even with the dollar doing what it was doing. And now, and a lot of times we will explore these entire fair auctions. That unfair high is 12.11 on gold. But let's take a look at the daily. Here we go. I'll slow down. So when we reach our initial targets, we talk about, let's, again, take some weight off and let's kind of see what happens here. That's okay. We get the breakout. The train left. People were probably kicking themselves that got out, that I said maybe it was a good time to take some off the table. But you get these powerful moves down, and this is where really, you could have gotten faked out here. Nobody knows if we're going to actually stay above those unfair highs. But when we get that close above and then we get that retest, these are really additional good, points to be looking at, picking battles on the long side. You got the bump off the unfair lows at 1146, having that close above, go back and retest, move forward, take some off 69, and now we're getting the extra bump up off of the 69.70 area. So what do you do now? And here's the 240s. Let's just go down another time frame here. So in my opinion, right now, you still got kind of a longer term, long stance on that bounce off of 1146, and you've got now stops oriented, which again, you've been able to do that already. Stops oriented below 1169 in the fair auction, kind of using that as a lever to go higher. So that's where we're at on the February contract on gold. So still looking like this might be a decent place for it to consolidate and still move higher. Getting back above, what was the highs on Thursday? 1185, 1186. I think we could breach that. Might not happen today, but I think you've got a good kind of stake in the ground for longs on gold right now. Let's see here. Just reading it in. Okay, S&Ps. Here's where we're at. 2265, closed above. Come back and retest. Still looks like a long, guys. The long-term profiles, we had up, and again, I want to show you this and just kind of reiterate. Last week, that profile appearing below price action and getting down into those unfair lows on the daily, those were considered support areas, kind of looking at the ultra long-term breadth on the weekly, staying positive. That's the way the cookie crumbles. On the dollar, again, just really haven't had a lot of reasons to look at this any other way than just trying to buy support. Here's that 101.35 we talked about actually Thursday pre-market. We actually got down there. Friday bounced 101.35 right off of that inflection point, and it's off to the races again. So when you're looking at trying to block out one side of the marketplace, man, it's cold here. Woo. When you're looking at trying to block out one side of the marketplace, this instance being blocking out the short side, you're looking for buy points, you're looking for support, and you're looking for breakouts. And on the dollar, Viola, 101.35. So what do you do with it now moving forward? I still think you've got, we might not just kind of do a moonshot here on the long side. Here's the 240s. These are all numbers in the scanner that you can get hold of. 102, 56, 57 is going to be somewhat, short-term resistance here. But again, you've got a little bit higher number, 101.67, I think, to look at support there. So, the trades, the shorter term part of this bounce is almost over here at 102.56, but I think the dollar is going to go a lot higher. And now, God, I think Goldman Sachs even got on board with this. Let me pull up our currency server here. And when I say Goldman Sachs, I think finally got on board with this. And they're usually extremely late to the party in what they're telling people. And that means because they're already in the trade and almost out of the trade, and they're looking for somebody to help them get out of the trade from their core internal positions. Let's take a look at the euro. They're now talking about par with the dollar. So dollar's at 102 and some change right now, or 101 and some 102 and some change. Euro, they're talking about, from their standpoint, this floating down to 1. Here's the daily on it. I didn't like how this thing pierced this 105.43 area, but we've kind of reversed out of there, and it's okay to get back in the water on the short side. That was pretty short-lived. And the bigger inflection point, 105.85, that's kind of seemingly held here, and it looks like we're just spinning around on a long-term look at this just to really head lower. So again, haven't really changed my attitude towards that. Let's take a look at the pound. This thing just got hammered, and we talked about last week, possibly trying to play this with some options. Here's the weekly view on the British pound. We're getting down into those unfair lows around 120.90. We reached a low this week or today already of 121.24. So that's the big inflection point. Here's the daily. And I think last week we had talked about trying to trade this with, like buying a straddle, buying a strangle, kind of far out, just kind of letting this thing make a major move one way or the other. And it looks like we've now gotten into an area that is almost the bottom of the current fair auction. But we're going to talk about this a little bit more when we come back, folks, to figure out how to trade this.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Just trying to get a stock entered here. Taking a look at the British pound again. You know, it's always like, okay, thanks for telling me what it has done. What is it going to do? You know, this is a kind of a precipice here. So right now, you could be looking at trying to trade a bounce off this inflection point, but I'm not looking at the British pound from the short side. I have no idea which way it's going to, excuse me, from the long side. I have no idea which way this thing's going to go. That's why I was talking about just trying to trade a powerful long-term strangle on this particular product. Let's take a look at the Japanese yen. And last week we talked about the 118.66.67, you know, being the kind of the lid on this thing for a little while. So we reached a high last week of 118.61. So that was within a couple of pips there. Here's the daily. I still don't like trading this from the short side, so right now it's kind of a wait. I think the big back the truck up numbers, we talked about trying 115.89, 115.90. If that didn't work, 114.24 was the other big number to take a look at, trying to trade this from the long side. Again, trying to block out the short side on this particular trade. That's just the way I'm looking at it. Let's take a look at the Aussie dollar while we're in the currency scene over here. Excuse me. All right, so this one last week, again, you know, coming up into 73.56. The highs were 73.56, so that hit it to the tick last week and backed off. You know, the profile's kind of edged lower here. I'm not so sure about this trade. I talked last week. I think you got better things to put mental capital towards in the Aussie dollar trade right now. There's not a ton of leverage here. 72.02 is the big support area on this currency. I don't mind trading it from the long side down there. I think the U.S. dollar is going to probably rise a little bit. That's not going to affect the Australian dollar too much there. Here's the Chinese currency, long and strong. Here's our daily. Again, had a little bit of a break on the breaking below profiles. Kind of time to sit on the sidelines on the intermediate, but rallying back up in here. I just, I think Joey was probably right talking about this around 6.9 to 7 being just somewhat of a natural lid on that. I'm kind of sticking with that. Let's go back to our futures server here. Let's look at the Shanghai. And this is one, excuse me, 3302. Again, I think we can actually still head higher on this, 3,400 and even higher. That's the situation on the CSI 300. Tokyo's closed today. Let's take a look at the 10-year continuous. All right, so this was kind of that very similar setup to gold. Had that DMZ between 123.10, 123.20. Probably going to head higher here. Why? I like how it's closed above, come back and retested. I wouldn't be short the 10-year right now. You're going to have to kind of wait. I think the long-term rate scene's probably going to continue to go up, but right now, not exactly looking too conducive to shorts. Let's take a look at the 30-year. Kind of even showed itself a little bit earlier 2 weeks ago, and then last week we retested 148.29, reached a low of 149.02, so got very close to the battle point there. Right in the middle of a fair auction on the weekly now. Here's going to be your targets. We talked about this last week, 153.31, 154. Almost reached it Friday when I wasn't around. Still think we can go a little bit higher here on the 10-year, but the thing is right now, and here's the 240s, excuse me, on the 30-year. Here's kind of that 240 providing some inflection points to play defense against. I think we could still go a little bit higher here. It's kind of wild to. This are S&Ps again. All right. Silver. Talked about liking this a little less than the gold trade. Just kind of languishing down here relative to gold. So still kind of a no trade to me. Might not be a bad time to get short silver and long gold, though. I mean, it's still a decent spread right now. I'm going to hit natural gas just to do it. The Feb contract. Oh my God, man, my hands are freezing here. It's like you can't get warm. This is unheard of. All right, so natural gas. All right, getting down into a big weekly inflection point here, beginning of the week. 3.194. We're there right now. I don't trade natural gas, but this is something to look at, possibly nibbling from the long side. Copper. All right. I still, I think we're consolidating here. Stops below 2.490. Stops below there, and we could probably bounce a little bit higher. I kind of like that setup on copper now, being in a new fair auction. God, that was a heck of a trade before, huh? Down at 2. Whew. All right. Let's take a look at March beans really quick. I've been pretty bearish on this product and grains in general. Last week, we just kind of empathetically got up into 10.19. What did we reach a high of last week? 10.16, and just kind of trailed off towards the end of the week, closed ugly. And let's just see, that's the weekly. This is the daily. $10, I think, stops above there. I think we can actually head lower on March beans. Let's hit the XLU. So this is one, we talked about trying to trade this from the long side a little bit, and 49.45 is the targets. I still kind of like this trade, and I like how it's kind of compressing up into this inflection point. We should get a pop here in the XLU, and if the 10-year and the 30-year kind of climb a little bit higher, it's going to help that trade out, as you know. Let's take a look at the XLE. Then we'll hit crude. Talked about the profile appearing below price action on the weekly here. That's bullish no matter what. And here's the daily. So you've got stops below 74.96 on this trade. Let's hit crude really quick while we're talking about that. Got a good bounce off this 52.26. I still like this trade from the long side. The dollar's probably not helping things out this morning, but crude's showing some pretty serious strength, and I don't mind looking at this from the long side, only with stops below 52.26. All right, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show, and we're in for a treat. John from Philadelphia is going to be calling in the next segment. Whew, did I say it was cold? All right. We're taking a look at crude before we went on the break. Still love this from the long side. I think it's still do another, just kind of stepping back and looking at it. You know, when you get above profiles and you start spinning around up here and you get away from the inflection point. I know we're kind of gravitating back to it right now, but it's just just not a short feeling situation by any means. Let's take a look at Apple. I think we're going to talk about, I hope we talk about a lot of things with John from Philadelphia, but I think we're talking about silver and wheat ideas, so stay tuned. Okay, Apple. All right, so this is one, I've been monitoring. I set a little alert up to let me know if it was going to go below 114.82 last week. Obviously, it just used that as support. The reason being is because I was hoping we'd start caving in below 114.82. The market in general didn't allow that, and get a weekly close within 114.82. Then I could start looking at it as something that might start exploring more of the fair auction down below. That didn't happen. Therefore, no trade. Sometimes a no trade is a good thing, especially when it keeps you out of trouble. American Express, just like every other financial out there, just blowing a lid off things. But last week we had a unfair high, unfair low, and a POC, a new one appear here. This is a little bit of a scarier situation, but it might not be a bad idea to look at this for a short-term trade. Stops above 75.74. I don't do these types of things too often, but I got a feeling. I hate it when I have feelings too, but I think we're going to be in for more of a relaxing situation. You've also got a new supply that's going to happen on AXP today, as opposed to looking at something like JP Morgan. There's just nothing to play defense up here against. So, AXP, you have a little bit of a line in the sand there. Let's take a look at Tesla. What David White has his retirement, heavy weighted his RA, 80% of his RA is in Tesla. So on the long side, we all know that. 208s, let's just get the right time frame up here. I'm just kidding, David, if you're listening. So there was the not okay to be short anymore sign 2 weeks ago. Closing above 208.17 on the weekly, just kind of breaking above there. I was looking at that as a little bit of a short opportunity, but then again, just like some other instruments that we've looked at, namely Apple, doesn't allow you to really go short. Here's, that being said, 2 days ago, we had, again, close above daily profiles and then a retest on Friday, reached a low of 221. That inflection point's 221. So, what do you do with Tesla now? You can try to be a cowboy on this, but there's just nothing up here to play defense. This is our 240s. I don't know why that keeps labeling it wrong. Let me put the right time frames in here. Okay. All right, so that's the situation on Tesla. Still not a short by any means. Somebody's asking me about VIX calls possibly. And also, is there a bottom forming in the British pound? There's definitely a trading opportunity on the bottom of these weeklies on the British pound, and I'll go back and look at that really quick. Let me get rid of Home Depot for a second. Going back to the British pound, we've had a pretty big move down today. Here's the just kind of blow this up here. There's the unfair lows on the weekly. We bounced a little bit. I'm just concerned about being long this right now. So I'd actually rather trade the breakdown, but we did talk about some option strategies to kind of take advantage of the contraction in volatility that had happened on this product, and being smack dab in the middle of the fair auction. I think when we started talking about this, I got a feeling this thing's going to go lower, so I'm not exactly interested in buying that, but it is the bottom of the range. Let's see, the VIX. Let's go back to that really quick. Hadn't talked about it today. I don't know why I'm saying going back to it. So we're sub 12. I kind of like Steve Banger's concept on the, I mean, you know, even doing a debit spread on this, and that could be possibly, you know, selling the near term. Wait a minute, let me get this straight in my head. Hold on. A debit spread, just to keep it simple, keeping it the same. I would, you know, look at this, you know, two months out at least. And the, you know, the farther out option, the one that you on the debit spread, you're buying nearer term and selling, excuse me, you're buying near strike and selling higher strike. In case, you know, you're not right and the thing falls apart even more so, you're at least kind of recouping some of the, and you're limiting your upside on that type of a spread. You guys know that. If you watch some of the Thinkorswim shows, you probably had that beat in your head a couple of times, but in a good way. But if you're looking at this, trading it from a debit spread, you know, sometimes it might not be a bad idea to buy the, and you can look at the curves on this, I believe, in Thinkorswim or a lot of different option platforms and kind of figure out what you want your risk reward scenario to be. But possibly buying the far out calls, maybe, you know, 3 months out, and then selling the farther out strike as the near term month. And that way, you know, you're kind of taking advantage of a collapse and time decay and all that on the near term option. And that's kind of a modified debit spread, calendar spread kind of situation. But take a look at the graphs on it. There's a lot of cool, you know, option strategy softwares out there, and they provide some pretty good graphs to look at the upside and the downside. You're obviously on that particular strategy, you're trying to take advantage of some near-term time decay if you're not exactly right on that particular trade and it moving up drastically immediately. So I like this fixed trade down here, though. Instead of trying to go long, go short to get some pieces. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that
many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And I think we're honored to have John from Philadelphia on. John, are you there?
I am, John. I cringe when you say honored.
Man, I'm serious. This is a total treat when you call in.
Oh, Lord. I say, first off, thank you for responding to my question on the British pound.
Okay.
I've been doing some bottom picking on this, looking for lows leading to an intermediate term rally, which of course has not occurred as of yet. Mm-hmm. But when I asked the question, having been flat over the weekend and seeing it come down to 121.25, and you answering by saying the TAS weekly profile has a low of what? 21.25 exactly. That is just too weird.
Yeah, I mean, it's in that neighborhood. I'm just, just opening up to you here. I'm just terrified to buy this thing now. It just, I don't know. I mean, I know you got to look at these things in a rote manner, and it is what it is on the profiles, in my opinion. But I'm just scared to nibble here. What are your thoughts
John,
on it? Yeah.
No, you know what? I am grateful you uttered that thought. Here's why.
Yeah. Okay.
That sentiment that you have in your mind must be held by a great many humans around the planet.
You're probably right.
And that is exactly the sentiment of which bottoms are formed.
Yeah, exactly.
And what I'll share with you, just on the British pound, and I don't want to focus on this, but let me just get that out of the way.
Yeah, sure.
The British pound made a peak up at 171 versus the dollar back just 2 years ago. And now it's 121. For major developed economies, that is a huge, I repeat, double huge move. That's not to say it can't go to 120 or 110 or 100. But at some point, we're going to get a good intermediate-term rally, so I'm looking for bottoms myself. Or put it this way, every low-risk setup on the buy side I see, I'm taking. And I'm making some money, not a huge amount, but that's my game there, only because my suspicion is at some points the sentiment that you very well articulated, which I suspect is kind of throughout the market, will change to some extent. And my guess is when that changes, the British pound will be 130, 135, which is no great shakes, but if you lever it up, you got good gains.
Yeah, I mean, it's definitely worth kind of taking a stab at something down here and definitely playing the defense game. The risk reward, like you said, probably is relatively good right here. As far as just taking a shot at it, and I hear what you're saying. The whole world is thinking this thing is going to go lower now, probably. So, Yeah, I like your attitude based on that alone.
Switching subjects, you had talked both about silver, gold, and wheat earlier. I just wanted to share some relevant thoughts.
Sure.
On silver, I hear a great many people over time looking at intra-week action in silver and gold and seeing how they're different and drawing conclusions. For example, gold's moving up nicely from 1124 back in December, whereas silver looks like it's bubbling, but it looks weak, relatively speaking, and hence I'm not interested, is the thought I've often heard. What I'll share with you for my trading success after the silver market bottomed under 14 back in 2015, it was very helpful and successful for me in absolutely ignoring the differences between the two, so long as the intermediate term speculation looked to be on track. Because what these things do, since 2010, both silver and gold on an intermediate term basis go in the same direction. There's been no exception to that observation. But intra-week, intra-month, something on the short term, they diverge dramatically. But there's great opportunity to be had if you get the intermediate trend change called correct. And I'll just harken back to silver back between, say, May 1st and August 1st. And you and I and everybody else will recall on silver how silver made a pullback low near 1580 back, I think it was Memorial Day. And during that first half of the year, silver was clearly in a bull phase, but it was lagging gold, and I would regularly hear comment, well, I don't like silver because it's lagging. Then from 1580, Memorial Day, it went to 2120 within 5 weeks. So I just share that idea. If, for me, getting the intermediate term direction has been the key for success for me, and I totally ignore intraday, intra-week, intra-month divergences between the two, so long as the intermediate term view is not different between the two. And in this particular case, they both bottomed in December, and they're both working higher. So I just share that.
Right, yeah, and it could be a case where it just all of a sudden kind of catches up and maybe even overshoots too.
And that has happened often historically.
Yeah, I've seen that. Yeah.
I can't I mean, I've got my guesses, but whatever explanation I'd ever share with myself or anybody else is just a WAG, a wild guess, which isn't worth that much. And it's actually to get the correct answer to that question. Isn't required to trade profitably if you're getting the intermediate term correct. Right.
You want to hit wheat?
Yeah, one last thing I wanted to share with you. It's very clear to you and anybody looking at that market that the chances appear reasonable that a bottom is being carved out. But it hasn't gotten going much yet. Let me just share this idea fundamentally. Since the 2012 catastrophic United States drought, where crop losses were extreme, and just to put some meat on the bones on how severe that the crop losses were, recall just this past summer the corn crop came in, and in the United States the average corn yield was 175 bushels per acre, a record high.
Yeah.
Contrast that to 2012, where the national yield was 122. So that just gives you some numbers to conceptually understand and appreciate how dramatically small the crop was in 12 and how large it is today.
Right.
But with that in mind, what I'll share with you is crop supplies in the U.S. and globally are at record highs. Beans, corn, and wheat. And in terms of excess supplies,
Can you hang on through the break?
sure, I'll finish that thought when we come back.
Great, thank you. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. And I think we've still got John from Philadelphia on with us. John, you still there?
John, I sure am.
Great. I'm showing July wheat right now. Is that the kind of the month you want to look at?
Yeah, that's worthwhile looking at. That, of course, is the July new crop wheat. That's the soft red winter wheat crop. That's
right.
The stuff that's generally put into feed rations.
Mm-hmm.
But what I wanted to share on wheat is the bear market is well established, very mature. The chance for carving out a bear market bottom is obvious, but there's, of course, no proof and uptrends involved yet. But I share something I was thinking about over the weekend.
Okay.
Just to put some numbers on it, globally and the U.S. both, wheat supplies from prior crops are enormously huge. And, of course, you'd figure that given prices as low as they are. But if you if you think the wheat crop is something like 2.5 to 3 billion bushels here in the U.S., the amount of supplies at the end of the marketing year, which is like June 1st or July 1st, is estimated to be 1 billion. So if you think of it, you're producing 2.5 or 3 max, and you still have 1 billion left over. That's just huge, burdensome supplies.
No kidding.
As far as crops this past year, 2016, gone past, the national yield for wheat in the U.S. was 53 bushels per acre. That's a record. And contrast that to just 44 in 2015, which wasn't a bad year. In other words, growing conditions for the wheat crop in 16 were extraordinarily good. Anyway, so burdensome stocks, bear market bottom, but I share this thought that I'm thinking about. I'm thinking to Russia, 1990, 91, 92. And you recall back at that time, the Berlin Wall had fallen, I think it was 89.
Uh-huh.
And from 89 into 93, I think it was, when Gorbachev was ousted via a coup, the Soviet economy was falling down the toilets. And somewhere in that period of time, I forget which year, I recall the wheat price absolutely surged. And what went on then was that demand from Russian buyers was huge. And that drove price up, like 50%. I think it was 91, to tell you the truth. But the reason the Russians were buying huge was because prior to that they had excessive stocks, and they didn't have any place to store it. They had, you have some barns, you have some silos, but those are all full, and all the extra stuff is just stored out on the ground. And all that stuff in Russia back in 91 went bad. It just rotted.
Yeah.
And we've got excessive supplies here in the U.S. now. I can't help but think the risk exists of the crop rotting. And you'll never hear anybody come out and tell you it's rotting. You'll just see price action, which is, the elevator operators up in, Kansas City or central Iowa who are buying the bejesus out of it. So I just wanted to share that as a possibility, as something that could be a bull market factor.
That's a good thought. Tomorrow, we're running out of time here, but tomorrow I'd like to tell you a story. I went to Constanta in Romania on the Black Sea about 10 years ago, and I want to tell you about that relative to what you're talking about in the silos and fields of wheat and all that tomorrow.
I love listening to that tomorrow, John. Thanks so much.
Cool. Thanks for joining us today, and guys, you've been great. We'll pick it up again tomorrow. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.